How to create infinite possible returns with minimal risk. My name is Don Kaufman. You are watching a TheoTrade presentation. Quick risk disclosure, we're not a financial advisor nor a broker-dealer. I always throw this up here. I was in the professional trading world for a few years, but I also worked in the brokerage world for about 15 years. A lot of you guys may know that. I'm no longer a broker-dealer. Moving along, copyright disclaimer, this is ours, this is not yours. You know, one of the other reasons we throw this up here, and I always mention this, okay, listen, we're here and we answer emails, support at TheoTrade.com. That goes to all of us. If you need to get a hold of me after this evening, email support at TheoTrade.com. Listen, we've got an amazing support staff. All of our support crew here at TheoTrade are capable traders. And that's an unusual kind of occurrence over here. We trade. We can all answer trade-related emails, but I answer a lot of emails. You can get a hold of us. This is our address here in Scottsdale, Arizona. With that, let's continue on. This is a little bit about me, co-founder here of TheoTrade. So, little background. I started trading in the late 90s. I'm probably a little different than most people how I got involved in trading. I had family that traded. I had family that traded starting in Chicago in the 1970s. So again, kind of a quick background story for fun. If anybody knows anything about Chicago trading, there was a firm there in the 1970s. It was actually founded in the 1970s. It was called O'Connor and Associates. My uncle actually founded the firm. Although it was not his name, it was actually another group that financed it. But he was the founder of this firm, O'Connor and Associates. They owned over 500 seats on exchanges all over the world. And growing up, and again, I was only born in the 70s, right? But growing up, I always grew up around traders. I had visited trading floors at a really young age. I had a big interest in it. I could have gone to medical school. I have a undergrad in molecular genetics. You want fries with that? Anyway, that's a little bit about my background. So I got out of college. 3 weeks after I'm out of school, they basically said, "Listen, you want a clerk?" I said, "Absolutely." You put a 22-year-old kid on a trading floor in Chicago, and they're never going to leave. And I didn't. So starting in 98, I traded. Is actually literally, if you look back in 1998, almost to the day, I started in July of, it was right after July 4th of 98. Right after I started was the long-term capital management debacle. And it was an interesting start because by then I was already trading. Then I worked as a risk manager. About 18 months after I started, I had just a crazy opportunity. I knew some traders on the floor. They started a startup brokerage firm. It was called Thinkorswim. And I then ran education. I built the entire education division of Thinkorswim. Then I went on to run education for TD Ameritrade. TD Ameritrade acquired us for just over $600 million in 2009. They actually scooped us cheap during the financial crisis in 2009. I resided at TD Ameritrade all the way to 2015 before we launched TheoTrade. So it's a little bit about my background over here. I'm fairly familiar with a lot of TD Ameritrade, but I'm also familiar with several other brokerage firms. We deal with E-Trade, we deal with Tastyworks, we deal with a lot of the different brokerage firms out there, so I'm really familiar. Obviously, I'm most familiar with Thinkorswim because myself and a couple other people here at TheoTrade helped build a lot of the technology. I've done a couple of CNBC tours over the years. Actually, I just did a TV broadcast today, specifically for TD Ameritrade. A little bit about TheoTrade. You know, TheoTrade, what are we? And I like to tell you up front, we specialize in education for stocks, options, futures. We do trade some currencies as well. I don't want to diminish our ability to trade currencies. Now, we're founded by professional traders and trading educators. Everybody on our crew here has a minimum of 15 years of experience. Okay, that's 15 years of trading experience. And, you know, what's kind of been called, you know, the Netflix for traders, that's what TheoTrade really is. We're here to help you mitigate risks in the market. But we literally, we offer genres of trading for every style of trader, which also brings me to, these are the TheoTrade instructors. TheoTrade, we're not a one-trick pony. We're not Don Kaufman and crew. We have now 7 full-time instructors. As I said, we're kind of known now as the Netflix for traders. The reason is I've gone out of my way to find traders that not necessarily complement me, but are in contrast in a lot of ways. So Jeff Bierman, he is an analyst, trader. He's also the former chief technician for TD Ameritrade. Basically, he was the head chartist, the guy that looked at more charts than any other individual at all of TD Ameritrade. Is Jeff Bierman. Actually, if you've ever been on the Thinkorswim charts, Jeff helped build a lot of the studies for Thinkorswim. So Jeff also comes in from Thinkorswim and TD Ameritrade. Next, we have Matt Williamson. He's a market neutral. He's premium selling. For those of you that trade some options, this is our premium selling option strategist. Next, we actually come to Corey Rosenblum. He's our resident senior strategist. He's a swing trader. All right. For those of you looking for a swing trader, we've got one. Brandon Chapman. He's macroeconomics, technicals, and fundamentals. Brandon also comes from both Thinkorswim and TD Ameritrade. Brandon actually literally wrote the book on trading. The education firm that we ran at TD Ameritrade was the single largest stock market education firm in the entire world. Brandon actually wrote most of the course manuals along with myself and another couple of people in the group. Then we have Steve Slim Miller. Steve's actually been around trading for 43 years, stocks, options, and futures. He was actually predominantly on the CBOE, which is the Chicago Board Options Exchange. Last but definitely not least, if you're into this, Tony Rago. That's our intraday specialist. This is somebody that just trades futures throughout the course of the day. So there's a little introduction to what we kind of call, again, the Netflix for traders. Let's get into this. All right. I always say this, more effort is needed. Let me just kick this off by saying I recognize that many of you have been to the Gauntlet of different seminars, different sessions. You tune into pretty much everything. Okay. What TheoTrade is not. We are not going to be following the bouncing ball, red and green, flashing arrows. I don't want you guys to think this is going to be, get rich quick kind of thing. Listen, if you want to be involved in this business, there's going to be a little bit of a learning curve, right? There can be a little bit of demand on you. And people don't like that, and I'm going to challenge you right away. This course, tonight, it's not going to be some chart pattern to follow, not a bouncing ball with red and green flashing lights. If you want to learn this business, you got to be willing to put forth some effort. Now, I don't know what business any of you are in. I don't, okay? But I can assure you that whatever your business is, I probably couldn't walk in and pick it up, okay, instantaneously, right? I mean, somebody in here inevitably is like an engineer. Well, that I could walk into and do, right? They don't do anything. I'm just kidding, engineers. Calm down, right? But if you were a physician or something, think about how much training that is. It's 4 years of undergrad, 4 years of med school, 2 years, probably 2 to 3 years of residency, yada, yada, yada. And before you know it, oh, you're a physician. It only took 12 to 15 years. Well, trading, it's a little bit of a skill set. It's not going to be instant coffee. It's not going to be instant tea. And you have to know that. And I hope that you guys have a degree of respect for it, because don't think that you're going to walk into this industry and kill it overnight. All right. You have to have, all right, somebody holding your hand, somebody to learn from. And that's what we try to effectively do for you here at TheoTrade. Now, right down to it. Low risk market. Vol limbo. How low can volatility go? I like to kind of question that. When I call it like a low risk market, you guys think about the marketplace as a whole. And as I said, this is going to be an interactive session. Some of you guys are probably watching this on a recording. I don't care. Yell at your screen. Right now, you step back from this marketplace. Just think about it. Do you consider it low risk? Okay. Do you consider this marketplace right now low risk? You tell me. The awkward pause, having a little coffee in the evening. All right. Do you consider this low risk? Okay. This is fairly amazing because we're going to look at that here. It's interesting because everybody's like, no way, no way. Not one person said, yeah. Okay. It's low risk, right? Okay. There's always risk, but let's start with this. Okay. By the way, if you've never seen it before, that's Jerome Powell. In recent months, we've actually seen the risk in the markets abate. Risk in the markets is getting squashed like a bug right now. That's why? Because the Fed, once again, Fed's got your back. Jerome Powell has got your back. Ironically, okay, and I love doing this. The reason I put this slide in here is because what do you think? Who do you think speaking tomorrow, testifying in front of the Senate Oversight Committee, is actually testifying in front of two different committees. Nevertheless, Jerome Powell. But central bankers are supporting markets, and all should be well. But don't think about for a second that the International Monetary Fund having just downgraded world GDP. Again, by the way, International Monetary Fund. That is known, and I want to be very crystal clear about this because I'm going to talk a little bit about this before I get into the strategy. That is known as the IMF, International Monetary Fund. What do they do? Okay, well, between International Monetary Fund and the Bank of International Settlements, think of it as the central bank for central bankers. It's, central bankers. There's the European Central Bank. Okay, there's, the Bank of Japan. These are all central bankers. We here in the U.S., we call it the Fed, but International Monetary Fund has been downgrading the world gross domestic product. They're just downgrading the world growth, period. Now, we're going to have some fun with this. I was actually using these headlines in a video just the other night, but the IMF, again, International Monetary Fund. I want to start with a couple of headlines here because we were just questioning how much risk is in the marketplace. But check this out. The IMF, all right, sees the weakest world growth in 3 years as Europe slows. Now, that was specifically back in January of this year, right? But then we move forward, okay? We move forward. So they basically state growth is weak. Then they turn around and they go, IMF, they've downgraded growth to 3.3%. That was actually in April. Okay? It gets better. Then the IMF turns around and Lagarde actually, it's Christine Lagarde, runs the IMF. And the ECB, which is the European Central Bank's Mario Draghi, they turn around together, they hold hands, and they warn against troubling developments in the trade war. Amazingly, is June 12th. Hey, it gets better, okay? And then the IMF is urging global cooperation amid weaker growth. Now, you cannot make this crap up. Why? Check this out. Because if you're unaware, Christine Lagarde, now she's actually going to run the ECB, okay? I don't think anybody is catching what this really means. It means rates are going to negative. Plain and simple. Okay, the new ECB president, Christine Lagarde, praises negative interest rates. Look, she's been warning, okay, constantly. IMF, who do you think the head of the IMF was? Oh, it's Christine Lagarde. She's also tapped as the new president of ECB. It's going to change everything, people. We're going into negative interest rates, and you should be aware of that. That's negative interest rates specific to Europe, but a big component of tonight's session, is the wild uncertainty that we're about to be in, okay, with negative interest rate policy. And I'm going to finish that with this. Morgan Stanley, is this recent enough for you? Okay, because not much has been going on this week, but Morgan Stanley this week, they turned bearish on global stocks. In fact, if you actually read the article, what Morgan Stanley said, sell everything. Now, I'm not agreeing with that, but we're just having some fun to begin with. Save me, central banks. What you have to recognize is going on in the marketplace, okay, right now, is this amazing, dichotomy, if you would. On one side over here, you have all the risks. You've got Brexit. You've got slowing global growth rates. You've got the 2020 elections, which is just huge uncertainty. You got trade wars. You got yield curve inversion. You got debt bubbles everywhere. Corporate debt. Do you have any idea how bad corporate debt is right now? Forget it. Who cares? Corporate debt is leading to stock buybacks, geopolitics. I don't know. I figured I'd just throw Iran in there for right now. It doesn't stop, okay? And on the opposite side of the spectrum, what do you have, okay? You have nothing but central banks, okay? It's central banks versus everybody. That's it. Plain and simple. There is no other saving grace. It's central banks versus everything. Plain and simple. And during all of this, and this is the point that I want you to really grab, right? A myriad of risks. And the VIX is in decline. Now, this is actually a quick shot of the VIX. Here's actually, this is the December, what do you want to call it? The Christmas Eve, the nightmare on Christmas Eve. This was actually Christmas Eve when the volatility spiked. The volatility has done nothing but go down effectively ever since. All of those risks, and the VIX is in decline. So the irony of this entire conversation to begin with is that what you interpret as risk clearly isn't being interpreted as risk of the market. So are you right? Is the market right? Okay, well, we're going to try to answer that here momentarily. But I want you to think about this. The myriad of risks, but a very, very low volatility. And therein lies opportunity. Okay, that's one of the biggest opportunities over here. And if I ask this question to the average individual that might want to be involved in the markets, how do you take advantage of this? I want you to think about this. Foreshadow. How do you take advantage of this? How do you take advantage of the idea, okay, that you see all these risks, okay, but the volatility in the marketplace is clearly and definitively in decline? How can you take advantage of that, right? Because that's where people are like, oh, maybe I should buy volatility, maybe I should do this. Now, to consider this, right? And again, I want to bring all these risks to the forefront, right? This does not construe not a bear. I am not attempting this evening to position markets as bearish, or I'm not here to create a bearish case, right? I simply want to deliver to you, if you would, right? It's the entire world of risks versus the central banks, plain and simple. We're simply asserting that markets appear to be continually underappreciating, undervaluing future risks, but it's both on bullish and on bearish sides of the marketplace, right? Let's go forward. Let's actually take a quick glance. This is a screenshot, okay, of the spiders. Now, if you're not familiar with the spiders, let me get you in tune really quick. The spiders, it's the S&P 500. Right? Basically, it's the S&P 500, something that's quoted every single day. But one of the things you have to realize, the S&P 500 on a year-to-date basis, this is a year-to-date chart, right? Which basically means January to right now, the spiders are up, okay, 18.5%. But the VIX, which is the Volatility Index, how many people here are relatively familiar with the VIX? Okay? You familiar with the VIX? Anybody? The VIX? It's the S&P 500 Volatility Index. I just showed a chart of it a moment ago. The VIX, of course, is in decline. Some people kind of call it like the fear index. Quite frankly, I'm not that into the VIX. But the shocking part is the VIX is at 14, but the market's moving by a rate of 18%. What am I really saying over here? Okay? I'll tell you exactly what I'm saying. I don't want to hedge around this. This marketplace, the actual market movement is exceeding the volatility. Actual market movement is exceeding the volatility. So what am I saying? Well, the market's doing more, okay, than we're giving good credit for right now. All right, next. Well, volatility. Let's talk briefly about volatility. Volatility is I believe, a softer, gentler word for risk. Because when it comes down to it, when people talk about volatility, they often think of volatility, it's movement, it's this, it's that, okay? Listen, put all that aside. In the end, volatility is the equivalency of risk. Volatility is a measurement of risk. Now, option markets can actually be thought of as putting a price tag on risk. Now, time out for a second. There it is. I just said the O word, okay? Anybody tonight, is there anybody joining us tonight? By the way, please, by all means, chat it, right? Anybody joining us tonight that has absolutely no options experience whatsoever? You're brand new, okay? You're so brand new and you just have no idea. It's okay. Because, I mean, the bottom line is everybody's here tonight to learn, right? So when you think of options and option markets, I'm not going to try to go wildly deep into the idea of options right now, but I don't mind bringing up a nice options chain in the spiders. And I'm going to do a really brief, quick and dirty explanation. I said I'm going to bring up a live trading application because so few people do this these days. Everything's PowerPoints and video. Forget it. Pull up a live trading application, right? Get eyes on a screen. I'm going to open up options for the next 10 days. And all I want you to look at on these options, okay, is right here. I'm going to highlight it. This is a 298 call. And that 298 call is trading for $1.60. Okay? Why is it trading for $1.60? Why is it trading for $1.60? Because people are like, because that's what the market maker said. Listen, this is a very fair marketplace. You could be both a buyer or a seller. What does that mean? It means right now you could buy this option, you could sell this option. In the end, this option is priced this way, okay, because of the risk in the marketplace. It's because the perception of movement in a market. And effectively, okay, the options are really nothing more, okay, than putting a price tag on risk 10 days into the future, 13 days into the future, 15 days into the future. Don't think of an option as any more than just that. Forget that calls and puts even exist, okay? Because you could look at an option, you could say 10 days from now, how far? I want to know something 10 days from now. How far do you think this market can move? Right here's an answer. The market is supposed to move by $4.50 higher or lower. Plain and simple. It's supposed to move $4.50. How do I pull that out of thin air? I didn't pull it out of thin air. The 10-day options told me so. 15 days from now, the options market is supposed to what? It says that this stock, right, which is the spiders, which is an ETF, is supposed to move up or down $5.50. Now the question is that working? Is that number actually working? So forget everything that you ever knew about options. I'm serious. Put it aside. Don't worry about a call. Don't worry about a put. The real thing that options do, options, okay, are there to handicap risk into the future, right? That's all they're doing. Now, if a marketplace has high risk, it equates to higher options pricing. Like think of a really risky stock, huh? Anybody? Anybody? Really, really risky stock. Like what's the riskiest thing you could possibly think of? Come on, you could do better than Tesla. Like the riskiest stock you could possibly think of, you know? Oh, it's dead quiet in here. Dead quiet. Okay? Priceline. All right? All right. Boeing. Boeing is not, come on. Volatile on Boeing is getting into 737 Max right now. But most of the stocks you guys are mentioning, they're not beyond. All right, you got me. That one's volatile. All right. If you guys are not familiar with, it's Beyond Meat. Beyond Meat's gone beyond ridiculous. It's about a 64%. Okay. I thought somebody was going to mention something like Tilray. Tilray's a fun one. Look at that. About the same. Anyway, because it has more risk, the options are just saying the stock can do what? It can move more. That's it. That's all that really equates to. Just, again, options are nothing more than handicapping risk, and lower risk equates to lower options pricing. So what has risk volatility been lately in the markets? It's been really low. We just showed that a moment ago. It's been really low. But the options conundrum. There's a conundrum with options. Option markets over the past few years have done a poor job of handicapping, okay, risk in the future. They've done I'm going to say this nicely, they've done a terrible job. That's the nicest way. Poor is unfortunate. They've done a terrible job of pricing risk into the future. What I am effectively saying is this. What I just showed you a moment ago, I want you to think about something. Okay? I'm going to go back to the spiders. The spiders market 24 days from now. 24 days. And by the way, I'm picking just a completely esoteric number. 24 days from now, the spiders say that they're supposed to move up or down $8.50. You with me? $8.50 is what we're supposed to move. But the options market's done a terrible job. How far can we really move? Right? How far can we really move? And the answer is, well, option volatility has been incredibly low. And yet we have sustained some of the single greatest moves ever recorded in the history of markets. And if you want to gain an edge in these markets, this is it. This is it. And again, I'm going to cruise back over to the trading application. I'm going to show you something because I think that's a fairly bold statement. All right? I'm actually going to knock down the time frame here to the last 3 years. We're just going to look at the last 3 years in the marketplace. In fact, you know what? I'll even open up to 5 years. Some of the moves that we have seen lately in a low volatility marketplace have been phenomenal. In fact, let's now zoom in a little tighter in time frame. Okay? Just look and bear with me for a second. Right here, okay, this is the beginning of 2018. I'm just highlighting. That's 2018. Wild enough for you? Because now look at 2019, right? The amount of moves that we're getting up and down, okay, are well outpacing what the options marketplace is pricing it to do. The moves, okay, are absolutely unequivocally vicious. The edge is this: positioning your portfolio for a big move. You got to turn what I just talked about, right? And I briefly discussed like negative interest rate policy. Why did I even cover that? You're going to see in a second. You got to get kind of down and dirty. You have to turn what I just mentioned into how am I going to actually make, brass tacks, like how am I going to make money doing this? I'm going to help you position yourself most effectively for the possibility of continued extreme movements without exposing yourself, though, to drastic risks. And you don't want to get cute with this. This stuff is really serious. There are potentially billions of dollars up for grabs. Okay? You have to understand the future of this marketplace, it's bright. All right? And the reason that the future is bright, because it is full of ridiculous risks out here. I'm going to be incredibly frank with you, because we're headed towards, okay, what looks like zero interest rates and possibly negative interest rates. Now, again, it's a bold statement. I'm going to pull up the TNX. This is the 10-year Treasury. I want you to look at the history of the 10-year Treasury. This, it's the max available chart. And just bear with me for a second, because, again, this lends itself to this strategy. Interest rates, this is a 10-year, right? And this is from 1998 to the present day. 1998 to the present day. Notice anything in terms of a trend, okay? Rates ain't never coming back up. They're never coming back up. Maybe not in my lifetime. I don't know. But I'll tell you right now, interest rates are doing nothing but going down. The more capital that's flooded into the market, the more suppression of volatility we get. And anytime you suppress anything, eventually it's going to absolutely erupt in your face. All I'm suggesting here, when we hit zero interest rates, negative interest rates, you have to understand, it allows these firms to borrow money at next to nothing. Okay? When you can borrow somebody else's money for next to nothing, let me ask the question. Do you think you might go out there as a trader and do ridiculous things with that capital? Why do you care? It's not your money. And it goes on again and again and again. And I'm telling you, this is what is making the opportunities there. Okay? All I'm suggesting in here, having placed the correct options-based strategies is going to make all the difference in here. You are going to see Mr. Toad's wild ride. I don't want to hear that you can see the future. People, you have no idea what Jerome Powell is even going to say. You don't know if they're going to cut interest rates. You don't know what's going to happen with the trade wars in China. It's just a complete free-for-all right now. And yet you're 2 trades away from this. Okay? This is the infinity spread. An infinity spread, it is what we term an outlier trade. An outlier trade. What is an outlier trade? Okay, first of all, and I'm going to go into much more detail specifically about the trade a little bit later in the presentation. But I just want to show you a couple things. Number one, this trade is being done all the way out in the September expiration, which means it's not going to have to be placed very often. Number two, this trade, okay, in this example is done in the spiders, but it doesn't have to be done in the spiders. It could be done, okay, in a lot of different products. But the spiders, come on, the spiders are so marquee, all right? I mean, what are the spiders? Well, the reason I use them is because they're the S&P 500. Everybody's familiar with it. When I call this an outlier trade, this right here is where the spiders are currently trading, right? What's an outlier trade? We explode to the upside, we rip to the downside. Explode to the upside, rip to the downside. If any large move happens, you're part of it. Plain and simple, you're part of it. Okay? The profit and loss graph is as clean as can possibly be. It's kind of fun. It almost looks like a friend of mine actually looked at this and he said, that looks like a hammock. And I'm like, it is. Okay? The trade doesn't cost you a tremendous amount up front. It's got limited risk to it. Very, very limited risk. You're not going to make anything in here. You're not going to make anything if the market stays rather docile. Okay? You make money for the outlier type positions. What's an outlier? You only have to place this trade approximately 4 times per year, then leave it alone. Okay? When the market rocks, you're going to do okay. That is the design. That's the implementation of this trade. It need not be monitored all that much. Now, for those of you that have experience, you're probably already digging into this a little bit. It's 2 types of back ratios, but the specifications of it are everything. And I'm also going to preface this whole conversation with, hey, listen, I'm showing you a trade. This screenshot was taken earlier today. But even though I'm showing you the trade, I'm telling you right now, please do not run out and go try to place this trade without fully understanding it. Okay? This trade is the absolute, okay, behemoth. It's a 20-pound sledgehammer. You know, it's like if you went out and placed this thing, this is only one contract. One contract. Okay? It's actually known as one unit inside of the spiders, which is fairly negligible. Do you realize that one unit, if the spiders were to sell off a little bit, look how much one unit, that's $1,000 on a 1 unit trade. If the spiders were to sell off, you can make $1,000. The spiders sold off to 250. Now people go, there's no way that the spiders are going down to 250. Really? Because they were at 230, 7 months ago. They were $230 7 months ago. And you know what? If you had this trade on, how would you have done? I can show you in a second because I did, all right? Because I've been doing these and variations of these now for years. This right now, okay, this is the dead zone. This is limited, okay, limited risk. Everything outside of it is absolutely golden. Do not run out and try to place this because the 20-pound sledgehammer can turn on you. You know, people go out and they treat this thing like it's like nailing in a thumbtack with a 20-pound sledgehammer. You know, try to nail it in, you're probably going to put a hole in the wall. You have to understand how to use this correctly, right? Now, bear with me. When I said that I've been placing these trades, this is like the full Monty. Variations, okay, and iterations of this trade I've been using for years. It's only more recently that we both identified and started to execute the trade as a package and start calling it an infinity spread. You can do all the research you want about infinity spreads. The infinity spread, by the way, the reason we call it the infinity spread is simply because it's unlimited to the upside, right? It's unlimited to the upside if the market explodes higher. Now, I want you to know this is a two-sided trade. If the market explodes higher, there's profitability. If the market explodes lower, there's profitability. Because right now, I don't really know precisely what negative rates are going to hold. I don't know. Okay? And that's, that's the truth. By the way, people are curious how much you can lose, right? In the trade, we can teach you how to exit the trade and not lose more than what's $1.43. $1.43. And you're like, how do you come up with $1.43? Part of the trade you're paying for, part of the trade there's a credit for. Okay? In fact, let me actually show you. Okay? And listen, is every single trade going to make money? Absolutely not. It's an outlier trade. Do you realize if you put this trade on 4 times a year, what do you put at risk? $1.43, and then you risk $1.43, and then you risk $1.43. But on the 4th time you do it, what do you make? $10, $12? It's probably worthwhile, isn't it? All right? Okay? This is one where you're trying to knock the cover off of a ball. Let me actually show you a couple of my trades. So my trades, the proof is in the pudding. Allow me to display a number of key events surrounding the last few years, okay, whereby markets and volatility did not effectively price risk, okay? Thereafter, I shall display the strategy, okay, and what I actually used to create the opportunities. The first time that I wanted to really display this to you, okay, this is actually right kind of when we were building TheoTrade in 2015. This is August of 2015. Some of you, does anybody remember this? The yuan devaluation? It's China's currency. Bottom line, China devalued their currency. When China devalued their currency, nobody saw it coming. This is what the S&Ps did. By the way, I know that move doesn't look big, but do you realize that move right here, took the spiders from 210, okay, and 1, 2, 3, 4 days later, it's just 4 days, they were trading 185. In one trade, this was a Monday. I still remember it really clearly. By the way, this is a Monday. The market went down 7% at the cash open. We were down 7% in the S&P 500, and they locked them up. Locked them up means they shut down the marketplace, only for a few moments. But basically, in 3 days, volatility tripled. This is what volatility was doing. On this particular event, okay, I placed a strategy very, very similar, okay, to this, which is the infinity spread. Profitability, okay. Now, I'm going to be really clear. This isn't a 24-hour period. It does not, okay, this P&L does not include the entire Chinese yuan devaluation event. All I wanted to do was select, okay, a finite period. This is a 24-hour period of time. The profitability in here, $17,399, okay. Now the volatility hit. This was a downside move. When the volatility hit, exploded. Absolutely exploded. By the way, at the time, this is pretty much every single, underlying that I had traded at that point on the year. And I'm not going to, sugarcoat this. I traded 16 times in that 24-hour period of time. But, made, just shy of $17,400. All right. That was one of the first events where volatility didn't just exceed expectations. It exploded through them, and it provided this just incredible opportunity. And that's where I really started to pay substantially more attention. The next event, this was a really big one for me personally. We actually launched TheoTrade during what was termed the taper tantrum of 2016. Again, like when you look back on it in a chart, it doesn't look like much. The irony is we were trading right around 210, and where did we end up going? Okay, the spiders went all the way down to 180. Kind of ironic because it's, just past, the 2015 debacle, and we slid down hard. Volatility doubled. This was one of the best volatility events. I'm going to tell you exactly why. It was one of the best volatility events because it wasn't just a flash in the pan. It lasted a while. Here is actually the market at about 15 volatility. The market got all the way up to a 30 vol. So volatility effectively doubled. Now, in this instance, I'm not going to show you just like, a 24-hour period of time. In this instance, I had a number of these types of trades on, okay? This was an iteration. It was the original iterations of what have become the infinity spread, okay? What I'm showing you here is a 2-month window. By the way, this is my account statement specifically from Thinkorswim, just to show you, okay? If you want to see what Thinkorswim looks like, here, bear with me a second. This is Thinkorswim. What I'm showing you right now is a screenshot. This is my account statement. So, for example, if I went to the spiders and I pulled up the spiders, this is 70 days of the spiders. That's everything I've done of the spiders from in just this one account for the last 70 days. Again, I do have a multitude of counts though in there. So all I did is took a screenshot, okay, of this particular period of time, okay? The P&L on the account is 100, just shy of 104,000. It's 103,780 on the account. So basically just shy of $104,000. Everybody questions what was the account size. The account size at this point in time, I started the year with $300,000 in this. It was a portfolio margin account, but I started with $300,000. So $100,000 profitability though in a 2-month window. This was exclusively though because of the expansion of volatility. Now, to kind of continue on, because the last few years have been spectacular. Next, we come to the Brexit vote. The Brexit vote of 2016. Everybody knew the Brexit vote was coming, right? How come you didn't have a trade on for it? I had no clue the way this is going to play out. All I knew was that the marketplace, check this out, the marketplace was already pricing volatility in. It was pricing volatility in. Wasn't pricing this, okay? Things got what, like totally nutty. Things got wild. This was actually one of my single best trading days. This is a 24-hour window. Look, that is June 23rd, okay, to June 24th, 2016. The P&L, and I apologize because, listen, there's a lot of trading that went on in this account, right? A lot of trading went on in this account. This is $25,201.13 in a 24-hour window, okay? My risk at that point in time, okay, nothing catastrophic. It was just, this was nothing huge, nothing wild, any way, shape, or form. Like what were some of the bigger positions I had on over here? Hey, listen, I was actually in positions in everything from Apple. I mean, it goes on and on. All the different, financial stocks I was in was big. Okay, that particular day though did quite well in a number of positions. Again, original iterations of the trade that I'm talking about tonight. We move on. Presidential election of 2016. I have to tell you, 2016 was like the year of dawn, but it was also the year that I solidified the building of this particular strategy. The presidential election. I'm actually going to show you trades from this. Okay. This is an infinity spread opening position, infinity spread closing position. Here's a type of a back spread, okay, which is part of the infinity spread. This is a type of a back spread. It was put on for a $2.65 credit. It was closed for a $19 credit, okay? You can see the exact dates and times of the executions. This was what? It was was less than 24 hours. I actually put this one on in an evening, okay, and closed it the next morning. This happens to be options on futures, but push that aside. That's not a necessity to trade. I also did an additional spread, okay, that evening. That one was done for a 70-cent credit and closed for a $30 credit. So again, risk versus reward. The presidential elections paid off. Next, we come to a volatility event. For January and February, I wanted to skip forward to more recent times. January, February 2018, the big volatility event. Volatility was 12. Prior to the single largest volatility percentage moves ever recorded in history. How did that one work? It was huge. This is the first time, right here in 2018, the beginning of 2018. This is the full-blown infinity spread. This is, okay, the infinity spread was actually placed on January 17th. It was closed on February 9th. These are actual execution prices. I put it on for $1.37. I closed it for $10.58 credit. Okay. That was, again, just 2018. Then we had the Fed-fueled selling in late 2018. This was actually what we kind of called the nightmare on Christmas. This is Fed-fueled selling. This is, again, a full-blown infinity spread. By this time, I had the strategy down pat. I paid $1.20 for it. I closed this one for $6.59. Again, another down move. Now, this one's going to be a little bit ramped up for those of you that are more experienced. This is the Fed-fueled buying in 2019. So a second ago, we're talking about Fed-fueled selling. Guess what? This is when the Fed 180'd here in 2019. People, is this recent enough for you? Now, this is actually a type of a roll. I rolled this thing for 17 cents. I closed it for $1.38 credit. Doesn't sound like much, but I had such negligible risk on at that period of time. Okay. I have become a crisis-seeking trader, an outlier trader, a trader that, hey, the profitability is so large because of the magnitude of these moves that to sit back, I trade every day. You don't necessarily have to, but I do trade every day. Put an infinity spread on. You can actually sit back, okay, and let fly. The crazy thing is if you look at 2018, there were 3 events that hit in 2018, okay? 2019 started off with a bang to the upside. 2019 is going to be good. Like this, we're just getting started right now, all right? When I started to trade these things, though, okay, all came back to the financial crisis. The financial crisis was phenomenal. It was the same idea, and it's what actually drove me. The financial crisis is what drove me into these crisis-seeking type trades. And the proceeds, by the way, the proceeds of the financial crisis went to buy this little monkey. That's home. That is home. That is a mountain. That is a mountain. That is home. But look at this. Zillow. The Zestimate for the house is $2.6 million. By the way, I'm going to be very clear. I didn't pay any $2.6 million. The house is not the trade. The trade, okay, facilitated over $1 million in profitability. And in 2010, I actually purchased the house for $1.3 million out here. Apparently, though, I've decreased by almost 42,000 in the last 30 days on here. Anyway, this is what the financial crisis turned into. You know, it's not always the most popular topic to talk about making a ton of money in the financial crisis, but I was there at the right place at the right time with crisis-seeking trades. I learned more in a 4-month window during the financial crisis about risk management and profitability, okay, than I did in the previous 10 years of my career. And that's, by the way, this, you know, people are like, where is this? Okay. That's downstairs. It is an indoor basketball court. People constantly ask me, but that's home. It's home. All of this is the infinity spread, but the opportunities for the infinity spread, okay, I'm not here to make a bullish or bearish case, and I like to be a bear. I really do. But I'm going to give you a bullish and a bearish case because the opportunities for the infinity spread right now, to me, appear better than they did coming into the financial crisis. Because during the financial crisis, the Fed was, you know, shifting. There was a lot going on. This, you have to realize what the Fed is doing, okay? The Fed right now, we're at the lowest unemployment at 3.7%. Now, I know not everybody believes those statistics. We're at the lowest unemployment at 3.7% that we've been since 1969. What is the Fed doing right now? They're lowering the interest rate in the lowest unemployment. Just pull down your pants, Mr. Fed. Bring it. Because I'll give you both a bullish and bearish case, because this is not the way it went down in '08. This is going to be wild moving forward. The bullish case, we could have a blow off top. The marketplace can absolutely explode higher. They can explode higher because of blow off top, but it also could explode higher because, quite frankly, the market loves cutting rates. Do you realize the worse the news gets, the worse the news, they're like, oh, there's horrible news in Germany right now. Industrial production sucks. They go, oh yeah, we should rally on that. China, if China recovers, is that a bullish case? I'm not even sure. The ECB, they're going into negative rates. There's no question about that. Brexit maybe gets voted out, ruled out. End to several trade wars. There's a bullish case. There's also a bearish case. China growth, a hard Brexit. Ooh, slowing global growth rates. By the way, slowing global growth rates. You could probably put that in the bullish case because that's actually made the market actually rally lately. Yield curve inversions, returns of the inventions, deflationary events, bubbles, stock buybacks are ended. I mean, by the way, stock buybacks, that's going to be big in the 2020 election. I can go on all day. You want to fight any of this, or do you just want to go into it? Hey, I'm not telling you, okay, that you need to trade these things every single day. I'm telling you need to place these things quarterly. Sit back and let it happen. You don't make anything in here, okay? If you want to go out and you want to learn to hit singles and doubles in the marketplace, we can teach you that all day long. But this particular strategy, again, I make this clear. This is crisis-seeking stuff. This is trying to knock the cover off of the ball, okay? And again, it is a ratio backspread and a ratio backspread. There are actually two components to this trade. The top one over here is what they call a risk twist spread, and it's a 1/3/1. And that ratio, the 1/3/1, that ratio, it's kind of like the secret is in the sauce. The ratio twists, okay, what's called skew in your favor. I don't want to go into total geeksville over here, but it twists skew in your favor on the put side of the equation. The call side, you don't need that. Here's some of the characteristics of the infinity spread. These things increase in value when exposed to heavy volatility. They increase in value when markets sell off or rally huge, right? So you're not sitting there going like, I really need to sell off, okay? Or rally. significant profit potential, downside market move, significant profit potential, and upside market move. They lose minimal capital, though, if we drift. Which is remaining flat, whatever. You don't lose that much, okay? What's fine about that, though, you only need to place this a few times a year. It's the perfect spread to reduce risk also of a stock portfolio. Think about this. If you have a 401k, if you have an IRA, if you have long stock, okay, look at the aforementioned risk graph. If you are long stock and the market tanks, this strategy can help offset risk. In fact, okay, a portion of the infinity spread course and course curriculum go into an amazing detail regarding, okay, how to build an allocation to use this strategy as a hedge. This strategy can be used inside, okay? It can be used inside of an IRA. So if it's a retirement account, that's fine. It's a great tool if you're looking for large returns on big market events. It's a great tool if you have a smaller account. By the way, Leslie was asking, can you use two back ratios? Absolutely, unequivocally no. Okay? This is actually placed two different strategies. We teach you everything. I mean, what it comes down to, sooner or later, you look at the strategy, but you gotta build it. Now, I don't want options to intimidate you, okay? But I do want you guys to know this, and I apologize. I see the number is off over here. It's not $1.38. It's $1.43. It's $1.43. I can count, people. That should say $1.43, which, oh yeah, we're going to fix that. It's $1.43. There it is. See? I knew it was $1.43. But you have to recognize this thing, it's a chainsaw. It's a chainsaw. You don't use this thing correctly, you're going to cut off a couple of fingers. All right? I'm telling you, you want to learn how to do this? Take the time to learn how to do it correctly. Okay? Because this is unequivocally one of the most powerful strategies. The questions that are coming in are exactly what they should be. Okay? You can't just use two back ratios. You can't go out there and place this as one trade. Okay? By exchange rule, it has to actually be placed as two different trades. We have a commission discount to actually help you place this because we don't want it to cost you a lot on commissions. Commissions? Come on, I was in the brokerage business for 15 years. Okay? I want you to save on commissions. I don't want you to spend commissions in here. Is this thing going to tie up margin? How many contracts do I do? You name it. Here, listen. This is what you need to know to successfully create infinite possible returns with minimal risk. This is what you need to learn to do these infinity spreads. You need to know when and where do I place, okay, these trades. When and where do I place these type of ratio trades? I'm going to tell you right now, you can't do these at all times. The volatility, it has to be perfect, has to be just ideal. How often should I place these ratio positions? And do they need to be continually monitored? All right? How do I set up the trades? And what's the correct market volatility to place the trades within? I was just referencing that a second ago. Volatility is everything. Do I need a large amount of capital in my account to do this? Absolutely not. Okay? You do, okay, by rule, have to have $2,000 in an account to trade these types of option strategies. By the way, we can get everybody options approval if you have $2,000. Okay? What underlying stocks or indices make the best candidates? You saw me use the spiders, but why the spiders? Okay? Well, why not use the QQQ, which is the NASDAQ? Why not use the Russell, the IWM? Why not use the SPX? Heck, you could even do this on Amazon. Why not? Okay? How do I know when to get in and out? Right? What are the percentage returns supposed to be? Can I do this in an IRA, a retirement account? Yeah. Right? Okay. What's the best size trades for my account size? What's the right risk for me? This is what we do here at TheoTrade. It's criteria. What's criteria? It's a recipe. It's what we do. I mean, that's what we build at TheoTrade. You're going to find out sooner or later that trading, it's about answering the what if. What if stock goes up? What if the stock goes down? What might be a good infinity spread candidate with the correct option expiration, okay, to trade? How much capital do I commit? When should I execute the trade? What strike price options do I buy? What do I sell? What's the delta supposed to be? We have the answers. That's what TheoTrade does. We build recipes, okay? You have to think of criteria as a recipe. We build these checklists, okay? Definitive checklists for each strategy and all the different variables that you're going to encounter. It's about, like how to put this on, when to put it on, why to put it on, at what price to put it on, what's the volatility. But come on, it's just the beginning. Like, you have to think of all the variables in the marketplace. Market can go up, market can go down, volatility can change. Okay. Again, you're going to face all these variables while trading infinity spreads, and we're going to actually teach you how to do every one. The secret of this, it's in the sauce. Everybody thinks about I can read about back ratios. You can read about back ratios. But you're not going to be able to read about an infinity spread. You're not going to find what took us years. And I'm going to tell you right now, it didn't just take years to do this and to fine tuning this thing. I have been trading iterations, okay, of this since 2007, right? It's over 10 years, and tens of thousands of my dollars have gone into fine tuning the trade setup. Okay. We have worked so much to not just put this trade together, but to put the steps together for you to be able to build the trade. Now, there's a lot of people that came in tonight, and I said, like, who's an absolute, okay, newbie in the markets, newbie in options trading. A lot of people said, yeah, I am. Okay. We can teach you precisely how to put this spread on. No matter how complex you might think it is, you give us 3 hours, we're going to actually teach you exactly how to put this on. Here's a little bit of what our clientele are saying. Okay. This one comes from Matthew W. Don's the most knowledgeable person I've ever heard in my over 50 years of stock investing. And I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. Highly recommend learning what this man has to say. Don, I closed the TLT risk twist. By the way, a risk twist is an iteration of this trade for 127% gain. Price was moving around so much and so fast, I ended up doing a market order. Oh, yuck. All right. Pretty excited to see the whole risk twist trade cycle and how well it worked. This is the Infinity Spread Workshop curriculum. This is what we teach during the course. How to construct an infinity spread for maximum returns, how to build your own infinity spread, how to build infinity spreads with your bullish, bearish, neutral, how to hedge your portfolio, okay, using, all right, these volatility sensitive strategies, when to open, when's the best time to close the infinity spread, the tools and strategies for analyzing market conditions, okay, how to actually create trades based on movement, okay, in market volatility and not purely direction. So we're actually not going to trade direction in this course. We're actually just going to trade market volatility. How you can generate big returns in small accounts or retirement accounts, which strike expiration to select, okay, and why infinity spreads are going to be perfect for part-time traders. It doesn't mean you have to be glued to the screen all day long over here. Maximum returns with infinity spreads, okay? This is a 3-hour course. It's available immediately, right? A huge amount of work went into this course. So we've edited it, cleaned it up. It's a 3-hour course. It's available immediately. The class slide deck that includes all of the entry and exit criteria, it's available immediately for download. Okay. The course is archived. It's available 24/7. You can download it. Okay. There's download capability on TheoTrade mobile for both iOS and Android. The course is $199. It qualifies you for a reduced commission rate. Now, we have a degree of a special this evening, and only this evening, okay? Again, I'll talk about the reduced commission rate here momentarily, but every time that I do these sessions, I always kind of feel like that everybody's already been through the gauntlet of everything. I mean, a lot of people, they come tonight and they're like, I've been there, I've done that. You know, you've got the bruises to show for it. Listen, people have been through the gauntlet of paid classes. You've paid for indicators and secret squirrel black boxes, a lot of crap and more. But you find that like everybody strings you along. Just buy this, but it's one last thing. Just buy this, but wait, there's more. You have to understand that TheoTrade, we've created this. We've had enough of educational garbage. We've had enough of educational garbage sales pitches, and we really do intend to put an end to it. We, as I said, we're the Netflix for traders, okay? We're here to disrupt the financial education industry. We're built by professional traders with a minimum of 15 years of experience. There's no professional salespeople here. Educating you is our only goal. And it's always going to be our only goal, and we're going to demonstrate just that. By the way, okay, at TheoTrade, there are just shy of 4,000 monthly members here. hopefully today we shall forever change the way that you view financial education. And we introduce to you TotalTheo. It's unlimited streaming monthly membership. What is it? And people, I don't want another membership. It's okay. Hang out for a second because I want you to see what this looks like. Okay? We provide access to not just one class. Do you want to go out and buy a class from us? I'll sell you a class. I'll sell the class to you for $199. Okay? Or I'll give you access to 83 trading classes. It's actually over 83 trading classes. They're all available immediately and on demand. Here's some of the classes. We have the next big short, the high probability in-out spreads course, the selling high probability spreads, iron condors, selling premium minimize your risk, survive and thrive at extreme volatility. This is day trading NASDAQ futures class, there's a covered calls class, essential skills for consistency in trading, top 10 skills for growing a small account, pairs trading, and a ton more. By the way, if you're in a technical analysis, there's an entire technical analysis section. It's access to over $5,000 in classes alone. How about this? Instead of you going out there and buying one class for $199, how about we give you access to everything that we do? Every class that we have. Every class that we've ever done since 2000, and we launched in 2016. Okay? We'll give you access to every single class. And $5,000 for it, I think that's a low number. There's one class in here that's worth more than that. In addition to it, we also give you access to 59 proprietary indicators. This is something that drives me crazy, okay? People constantly, they sell you like, I need the next latest, greatest indicator. Yeah, auto expected move is the most complicated. It's the most complicated indicator / script ever written in the history of the Thinkorswim trading application. We give it to you. We have gravity points here. We have TheoTrade, RSI, Laguerre. This is a Laguerre polynomial. Got to be a freaking rocket scientist to even look at that script. It's unbelievable. It's also deadly accurate. There's Quantix, NQ levels, next generation squeeze. Okay, we have position trackers, IV rank versus percentile. Okay, Theo quant setups, options activity, sizzle index, SPX expected move. $1,800 in indicators. You realize there's indicators in the marketplace. They charge you $1,000 in indicators. It's crazy. We give them to you. It's part of this. Okay. Then on top of it, we do coaching. We do live trades. We email trade ideas. Oh yeah, we have a live trading room. The live trading room, okay, is broadcasting 6 hours per day. Tomorrow will actually be 7 hours because we do a happy hour. We provide real-time trade ideas, real-time market insights, real-time analysis. We email out trade ideas, okay? And we will surely highlight and trade infinity spreads. We have 4 distinct trading portfolios, depending upon what you're trying to do. We have one for more people that are investors. We have one for active traders. Then we just have the live trading chat room. We just trade all day in there. Then we have daily coaching sessions with timely topics. This is continued education every single day. Oh yeah, and we also will answer all of your questions via email. The instructors answer the questions. Okay. You can go out, you can buy a coaching session. It's like $1,000 a month to get coaching. We give you access to all of it. It's part of it. All of it, it's TotalTheo Unlimited. It's $99 a month. You cancel at any time. It's not an introductory rate. I don't want to hear any of that stuff. Okay. People go, is there an introductory rate? Yeah, it's $99 a month. You don't think all that stuff's worth $99? We can't. People go, I want to pay $8. No, you will not pay $8. You will pay $99 because it gives you access to every single indicator, right? We want people that want to learn how to trade. This gives you access to infinity spreads. It gives you access to 83 classes, new monthly classes. Every month we're doing new classes. Live trading chat room, archive, okay? Email trade ideas, trading indicators and scans, daily coaching sessions, email support, and our mobile application. It's all found under TheoTrade.com/all. Again, it's TheoTrade.com/all. And I'll actually pull up, okay, that web address. It's TheoTrade.com/all. Now, not done yet. I'm going to answer some questions here momentarily, okay? This is, again, it's a little bit about what our clientele are saying. And I love this one down below. You have to kind of read this one. This was it was Gerald N. And you see December 17th, okay? And this was me emailing. All right, well, this is him emailing, then me emailing back. But it kind of goes from bottom up. Anyway, this conversation goes along the lines of like, listen, I had visions of sugar plums with max profit potential of 26,000, but I'll take 14,000 within a few days prior to expiration. It's huge, okay? You know what I said to him? This is really a huge return for an RTS. You know what an RTS is? It's a version of the infinity spread. So we're actually teaching this, okay, back a ways, but we were only teaching a portion of it. Now we've actually done the full-blown infinity spread. Thank you, sir, for the suggestion. I actually gave the trade idea back in mid-September. He closed it December 17th. It's big trade. This VIX volatility spread, okay, this is Marianne D, made 5,600 on a VIX volatility spread. It's basically like an infinity spread in the VIX, okay? Now, again, I want to reiterate something here. You can go out, you can buy the class for a one-time fee of $199, okay? Or it's as if we're giving you $100. Why do we give you $100? We would rather you do the $99 per month, because $99 per month just gives you access to everything. And you should have access to absolutely everything. Okay? I'm going to come back to this momentarily. Infinity spreads, 83 classes, new monthly classes, live trading chat room. In the live trading chat room, there's chat rooms that charge $300-$400 a month. Okay? One class is what? $200-$300 a month. There's classes in this archive that we originally charged $1,000 for. Everything's $99 a month. That's why we have just shy of 4,000 members on there. We're always adding instructors. Okay? We're not inundated with emails. We can always take more. Check this out. What our members are seeing. Look at this very carefully. Don and John, thanks for taking the time to answer my questions. With the lowered commission rate of blank, I cannot tell you what the commission rate is because there's several different brokerage firms that we deal with. We deal with E-Trade, we deal with Tastyworks, and we deal with TD Ameritrade. If you already have an account, open with those firms, it's fine. We will get you a discounted rate with your firm. But, okay, it just takes 8 round trips, which is basically 8 one-contract option trades to save $99. This is before you talk about all the services you're offering. Our commission discount is good enough. You got me. I'm in. Okay. How do we make this all happen? This is actually from Vince. It's a fairly recent one. And the last one I want to read to you. By the way, you guys are rocking it. Very impressed. It's refreshing to have you guys putting this together and sharing knowledge. Okay, and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. From David. Again, it's TheoTrade.com/all. I want to answer some questions. However, I also want to show you a little bit about, like, this is TheoTrade. This is what TheoTrade looks like. But let me answer a couple of questions as I actually show you TheoTrade. Actually, you know what? One of the first ones that comes up is with this membership. Do you give trade ideas? Absolutely. We actually email you out trade ideas. In fact, here's the portfolios. If you're curious, there's a duration portfolio, fruit fly, small account, sell premium portfolio, TheoTrade tracker. Selling premium ain't working that well right now, so we've backed off. The trade tracker, okay, growth account, and duration. I actually spend a lot of time in duration. I like it. Anyway, those are the trades that we actually do. So on the TheoTrade application, on our mobile application, we have all the archives on there, but we also have push notifications, okay, so we can actually push out trades and so forth, and we also email trade ideas to you. The other question that came up is somebody said, I'm brand new to this. If you're brand new to this, I want you to see what we have in here because it's important that you see this. It says start here. Guess what? If you're brand new, start here. Why does it say start here? Like, that's not funny, Don. No, it really is funny. Start here, options 101. Options 101. There's different parts to it. Options 201, 301, order execution. I suggest, even if you have great amounts of experience, spend some time in there, please. Okay. By the way, this is what the chat room looks like. It's off air. This is the chat room. Okay. All right. This is the actual chat room. And you can, listen, there are hundreds and hundreds of people in there every single day. This is our member home. Okay. It's a searchable archive. Our archives go back to 2016. Look, there's archives. There's member archive, coaching archive, and then we have archives broken down by individuals. Okay, those are the archives. There's Corey's Corner. I mean, Corey's Corner alone is worth $100 a month. It's just what he's seeing in the market right now. He writes his own, okay, kind of dissertation on a day-to-day basis of what's going on inside of the marketplace. It's phenomenal. Here's some of the classes that we offer. First of all, our classes are broken down to options, option newbies, technical analysis, day trading. I said, we are the Netflix of the trading community. You name a genre of trading. I'm serious. You name a genre of trading, it's in here. People like, I need some psychology classes. Here's mindset and trading plan classes. Okay. There is not a better class than the 5 essential building blocks to successful trading. This one's actually done by Slim Miller. All right. This class, when it first came out, was thousands and thousands of dollars. I want you to see, okay, all the different parts to it. It is phenomenal. It is the beast. I absolutely love it. Planner gets slaughtered. But that's a psychology-based course. There's, again, the Start Here menu. It's a full searchable archive. You type in any topic, okay? Assignment, bonds, buy premium, buy spreads. Name a topic. Futures trading, gamma scalping, in-out spreads, okay? These are just a few of the topics that I've typed in. It's good stuff, all right? All right. This is the web address. It's TheoTrade. Again, TheoTrade.com/all. I'm throwing it up here. Now, okay, I'm live each and every morning. I want you guys to know that myself, I don't go away. I'm on every single day. We don't take really vacations here at TheoTrade. In fact, my idea of a vacation, I bought another home an hour and 10 minutes away from my current home to go to the mountains and work. It's quiet. 3 little kids. TheoTrade.com/all. Let me answer a few of these questions over here. Again, one of the first ones, is this a subscription for $99 for 1 month? Can I cancel any time? Can I get out of TheoTrade? Can I stop? Absolutely unequivocally yes. Listen, I mean, we want you to be a member of TheoTrade for life. We do. And $99 a month, okay? Sure. But when you sign up for a month, if you leave after a month, I want you to know that we're still friends. We still, are happy, okay? I promise you one thing in here. You go in here, you check out what we have in there. It is shock and awe. But we believe we'd rather you be overwhelmed than underwhelmed. There's a lot of stuff on Netflix that you're never, ever going to watch. Okay? There's stuff on Netflix that you're never going to watch. But isn't it nice to know that you have access to it? And the same thing is true here. You're going to find a genre of trading. And we're going to hold your hand the entire way. And you got to know that even after tonight, email me. I don't care. Okay? It's what we do. I'll answer emails on a Sunday afternoon between football games. That's par for the course for us. It's summer. It's a little slower right now. Okay? By the way, do we have multiple playback speeds? Of course we do, man. We have our own mobile application. It's all built in there. You want to listen to me at 3 times, though? The speed? That's scary. Anyway, it's $99. And just give us a few days notice if you're going to cancel. You can cancel anytime. There's no introductory, okay? That price is not changing over there. We like it. You know why we like it? Because no one else in this entire industry can do what we're doing. No one else has 7 full-time instructors at $99 with all the indicators, the know-how. I mean, do you realize we have some of the original creators of the Thinkorswim charts on our crew? An individual on our crew, Brandon Chapman, the guy wrote the book, literally wrote the book for a course through TD Ameritrade that used to cost $24,000. And the stuff that we do here at TheoTrade smokes the $24,000 course. How do I know? I was running the education group at TD Ameritrade at the time. Brandon worked in our group. Okay, guy's absolutely phenomenal. All right. Another question came in. Can you help me get comfortable on Thinkorswim? Yeah, of course we can. All right. If you look at our site, we have what's called TheoTrade tutorials. Shh. You know what TheoTrade tutorials are? They're Thinkorswim tutorials. Analyze tab, scan tab, charts tab, unleashing the power of Thinkorswim. We got you covered on there. By the way, I'm slightly familiar with the Thinkorswim platform. Slightly. The Analyze tab, me and the Analyze tab, we related. We grew up together. I worked a tremendous amount in Thinkorswim on the analytics. I worked a tremendous amount on the order routing. That's kind of my areas of expertise on there. And then Jeff Bierman, of course, is our charting expert. Another question, somebody said, I can't get approved for options because you're a newbie. We'll help you get approved, not a problem at all. All the trades that we've discussed today could be done in an IRA. Almost everything that we discussed can be done in an IRA. I can't make it to live classes. I love this. That's, by the way, Jeff Roth is the other co-founder of TheoTrade, but that ain't Jeff Roth. That's my child. It's one of my children. It's a couple years ago though, but I like it. It's the iPood, little jersey he's wearing over there. It's a onesie. I could wear one of those. All right. Somebody else said, can I access Don in the future? Yeah, go to support@theotrade.com. This is the email address. Okay, support@theotrade.com, and then just title it Don. Put Don in there. I'm going to be honest. There's a couple of people that can answer really good trading questions, but it'll get sent to me with no problem whatsoever. James was asking, how much capital do I recommend doing this like full time? It depends on the type of trading you want to do, but I don't mind if you want and say like, hey, this is how much capital I have. Do you want to sit in front of your computer all day? You give me a couple of specs and I will literally on a one-off answer that question for you. Because I don't think it's fair. Like if you want to sit in front of your computer all day long with a $25,000 account, I think you could probably, make a decent living doing it. Okay. But if you're a person that doesn't want to do much and you want to make a living, like you're going to probably have to have more capital. So it depends on how much you're willing to put into it. By the way, I can show you, Anthony was asking a question, the screens that I showed earlier in TOS, okay, there was a plus or minus for every strike. How do we access that field in Thinkorswim? So you might be asking about, some of the strikes in here, or you might be asking how I actually built some of the trades in the analytics tab. This is it. By the way, this is real inventory. These are real positions that I have on right now. I trade in an account every day at TheoTrade that everybody gets to see. Like I don't hide anything. It's all live trading. Okay. What I do is what I do. And I'm going to tell you right now, I trade really, really small. You know why I trade small? You trade small, but I'll tell you what, that crap can add up pretty quick. All right. I got a lot of positions on. A lot of small positions equal a nice big position. Now think about that for a second. Again, last question I want to get over here. Oh, do we actually have futures here? Of course we have futures, and we have 83 classes in the archive. By the way, futures, it's a big area for us. It's a big area. So please, by all means, we do that. Somebody said I work all day and I'm busy in the evenings, so you provide trade ideas. Yes, Stephen, I also suggest that if you're working heavily, try to tune in to, you'll find an instructor you like. Tune in over TheoTrade Mobile, speed it up, okay? Everybody's on for an hour a day. So if you speed it up to twice, you have to listen for maybe 30 minutes here or there. Try to listen to somebody on a day-to-day basis, okay? Because it's going to cut the learning curve and get you understanding. To me, one of the most important things, and you guys should know this right off the bat, I don't want to just spoon feed you. I want you to understand how to do this stuff. If I get hit by a bus, you've got a recipe that you're going to be able. Okay, if I get hit by a bus tomorrow, you got a recipe, and those recipes literally can walk you into a trade. I mean, it's a pre-flight checklist, and that's critically important to me. With that, again, I'm going to try to answer a couple of more questions for you guys this evening. Again, just click add to cart. It's $99. Tomorrow morning, literally tomorrow morning, I am going to kick off the trading session. It's Wednesday. I'm going to do an hour in the morning. We start at 8:22 Central Time. 8:22 Central Time. It's exactly 8 minutes prior to the cash open. If you can't make that, that's fine. Okay. Tomorrow night's also Wednesday night. We're going to do a happy hour. Happy hour is 7 p.m. Central Time. That's actually going to be hosted by Matt Williamson. In fact, he's even got a title already for it. It's a stock repair strategy tomorrow night. Actually, Matt's doing like a mini class tomorrow. You won't want to miss that. I'll tell you right now, Matt's class tomorrow night, it's worth more than $99. TheoTrade.com/all. Thanks everybody for joining this evening. If you need anything, please chat in or email us. Thanks.